covering today, man?
Yeah, let's get into it. Episode question mark.
Yep.
Are we in a housing bubble?
Are we in a housing bubble? Hot topic.
Feels like it. The shit is bananas.
BANANAS.
Yes.
Yeah, I think people are naturally feeling that way because things have moved so quickly in the last, well, as far as they know, the last 18 months. Those, were in the business. It's been a little bit longer than 18 months.
Yeah.
People forget that 2019 was a very strong year.
Yeah.
But the media cycle was a little bit behind the times. People who weren't active in real estate didn't realize 2019 was crazy too. So you got 2019, 2020, and really coming to a head here in 2021.
Yeah. 2019, I think they thought it was like a little short stint. Like it was like, this is gonna slow down. I remember in the office, the sentiment was like, we're having a good season, but like it'll go back to normal, like whatever.
Yeah. Yeah.
And it just kind of kept getting more crazy.
Well, I used to count how many multiple offers I would get into so that I could track, all right, how much did we go over? Did I think I was going to be successful? Were we successful? And try to bring some sort of, collect some data on my own multiple offer situation so that I would have a higher likelihood of success in future multiple offers. And in 2019, I stopped counting at the end of March because I'd already been in 19.
Yeah.
Right? Which, previous to 2019 was unprecedented. I might be in like 10 in the course of a year.
Yeah.
And I mean, the last 18 months, I've probably been in less than 19 transactions that weren't multiple offers.
Oh, definitely.
Right?
Definitely.
So it's really been a big shift. But just because that happens doesn't necessarily mean it's a housing bubble. There's a big difference between what's a bubble versus what is a market correction, which is a more fiscally conservative way to say bubble potentially.
Potentially.
But it's an important difference.
So before we go into that, we need to talk about what is a bubble.
Yeah.
So I'll let you give your definition of bubble. I have the formal definition.
Ooh, okay.
It's a quiz. There's no wrong answers, but there is one.
The definition of a bubble is, I would say, a continued reliance on the greater fool principle, which is that something has its value only reliant on the fact that there will be a greater fool than you to whom you can sell that to at a slightly higher price. That there's no underlying intangible value to support that. You are inherently reliant on someone else just being willing to pay more than you, so it's a hot potato. But the idea being at some point, someone's going to be left, holding the bag, if you will.
Like the Toronto housing market.
Yeah, I mean, I think there's been, I don't know, there's been many examples of it in different market sectors. But how does that compare with the?
That is very close.
Webster's defines it.
Webster defines it as basically the rapid escalation of prices to the point where it outvalues its actual intrinsic value.
Yeah.
So if on an asset-based value, it's truly, if you boil it all down, worth $100,000. People are now trading at 150. The greater fool is going to pay 180 now. It's still only worth 100 or 110. You're now in what's considered a bubble.
Yeah, and maybe that person who bought it for 180 can find someone that would pay them 185, and maybe that person who got it for 185 might be able to find some for 190. But at some point, there's going to be a threshold there where it hits that, and people all realize at once en masse, oh my gosh, this was only worth $110,000 to begin with, and that is the burst, if you will.
Yeah. I think typically to get to that burst, it requires the availability of something at that lower value.
Yeah, there has to be.
Because if there is no option still, it's going to continue to go. But if there's someone that slides in and says, hey, I can get you that for 110 now, why the hell would I go pay 190?
Yeah, and this is sort of how do you reconcile this idea of something being a quote-unquote bubble with the idea that I know you and I both subscribe to pretty strongly of supply and demand, right? Like ultimately the market decides, and someone being willing to pay for something is, one could argue, the value of that. And just because that changes quickly doesn't mean something was wrong or right before.
Overvalued or undervalued.
I mean, that is the general principle of supply and demand.
Yep.
However, market value requires a few different things to be a true measure of market value. So, I mean, we can dive into that with a bit more scrutiny. But what are you seeing out there, and what are you hearing out there from people?
I think it's getting to the point now, locally within Halifax, there's some sentiment that it is a bit of a bubble. And I think it's really come to light because this summer, there's been a little bit of a slowdown.
Yep.
I'm not going to call it a pullback because I really don't think it's been a pullback.
No.
But there's been a bit of a slowdown. So instead of having 15 offers like we were having in the spring, you're having 5 to 7. And so everyone's like, oh, like here it comes. We're in a bubble. Like it's pulling back. And some like I'm getting a lot of people text me like, hey, I'm seeing price changes on MLS. Like what's going on? Like should I be waiting? And I'm usually saying no. You know what? Like they overpriced their house, assuming that they could catch wind of something. Like yeah, their neighbor listed for 300, sold for 400. So now they think I'm going to list for 400.
And then still they want $100,000 over. They're double counting. A lot of sellers are double counting. They're saying, okay, cool. The house was on for 300. It sold for 400, and so great. I want a $400,000 ask price, but also I see houses are selling for $100,000 over. So why can't I get 5? It's like no, you cannot have both. You can have one or the other.
Yeah.
So there's an element of that where sellers are now getting, I don't want to say the word greedy, right? But that's what buyers say, oh, they're getting greedy. But no, they're trying to navigate this market that changed very quickly, and they're trying to capitalize on it because that's what you're supposed to do.
Yeah.
But some of them are in moments choosing the wrong approach.
Yep.
And then what happens is the market starts to slow a little bit, and they're like, okay, well, maybe I was going to take the 300,000, list low and hope to sell for 4 approach.
Yep.
But now people keep telling me the market's slowing. So maybe I need to list at, 290 to cover my bets a little bit, right? And then people see it at 290, and the buyers go, oh, well, gosh, like they probably want like $50,000 over because everyone's getting $50,000 over. And I don't want to pay $340 for this. So then the home sits, right? Like, so this is the cat and mouse game that is at work right now, and that always kind of goes on. It's just the pendulum shifts a little bit from side to side, and you get a couple situations like, we came out of the pandemic, and everyone's like, this is amazing. We're out of jail. Like, let's go to the beach. Let's go to weddings. Let's sit on a patio. Then you have Canada Day long weekend. Now we had, this long weekend now.
You can fly. You're allowed, especially, again, hyper-locally, we can actually do things now.
Yep.
So it really emphasized things because in the last 2 weeks, I think airline bookings and flights into the airport have gone up like 5,000%. It was absurd. It was like the highest growth rate of anything that they've had in the airport. Obviously, because it was at 0. So if you go from 1 flight to 10, you get it tenfold.
Yeah.
But they're seeing that where people are like, you know what? I've been dealing with this housing crap for the last 12 months, and I've been staring at this, and it's been all I've been thinking about because I'm sitting at home and whatever. Yeah. Now I just want to get away and enjoy myself. And so I think you're even seeing, I was thinking about this, agents and brokers. Every email I send, every time I get an accepted offer, I'm sending it off to either a lawyer or a broker, and it's like, I'm on vacation for a week, and I'm like, if half the agents are gone, they're not pushing stuff to their clients, because as much as clients make the decisions, agents have a big input on what they look at. Yeah. And so if they're not here pushing the deals, like it just slows the whole thing down temporarily. And I think that's what we're feeling, again, on a short-term basis. Overall, if we're in a bubble, not answering that, but we're saying just in this little hyper-local
also, if like, for context, it's like, oh, okay, so the current situation is instead of 7 offers, there's only 3. And instead of selling in 3 days, it sells in a week. Is someone going to try to tell me that's what a buyer's market now? Is that what we're calling a buyer's market? I don't think so. So it's still an incredibly, incredibly strong market. So the question more so also with a bubble is it inherently implies that it is going to go up, and then it is going to rapidly and significantly pull back. So we're not talking like the situation we're in right now. It's like, oh, there's less offers on the property. Like that's not a burst. That's not a pullback. That is still a very, very, very strong seller's market.
Still inflating, just slightly slower.
Yeah. Or perhaps leveling off, which if you asked anyone in the industry, that was kind of the general prediction. At some point, this is going to have to level off because there are things like the law of substitution and how that affects values of properties. Like once you can substitute other things for that property, as you kind of alluded to, it will stop going up in price. Yep. Like for the longest time, the cap of what downtown Dartmouth could sell for was whatever North End Halifax was selling for. Yep. Because downtown Dartmouth would go up and up and up, and then at a certain point, if it was trading at the same value as North End Halifax, well, now you have the substitution effect, which means people would substitute homes in North End Halifax instead of the homes in Dartmouth, right? So these things all come into play, and for us here, the substitution effect for Halifax starts to become Like, okay, do I look at St. John's, or
Yep.
do I look at somewhere in New Brunswick, or does it make more sense for me to just stay in Ottawa? Like, if so.
Yeah.
But the thing is, we had a long gap to get there, right? So everyone was asking about this early on. I'm like, this is not a boom. This is not a bubble. This is a market correction. We were, without
Way
doubt,
undervalued.
we were way undervalued.
Yeah.
We were way undervalued. And now, like, we are undervalued relative to other major markets, but we are also undervalued for what we are offering and the cost of construction and the cost of land. Like, we were undervalued.
I used to always joke, you could sell your house for parts for more. Just
Oh
sell-
my God.
Like, the house
Yeah.
was selling for 200 grand. I'm like, you could literally just deconstruct this home and sell all the bits, and you probably get over 200 grand.
Totally. I remember showing a place down in Bridgetown, which is like, one of these small rural Nova Scotian towns where there's
Yeah.
not much going on. And I was in a beautiful turn of the center home. I'm like, man, this staircase is worth $20,000 and the home is 160 grand. It's like, so between the staircase, these stained glass windows, the lumber, like, man, could I get this back to the city? Right? I couldn't.
Yeah.
Overpasses are way too low. But
I
you
always
know-
think about that, buying a house in like Yarmouth. There's that giant, you said castle in Yarmouth for $2 million?
no.
But it's like a 17,000 square foot stone castle with a massive thing. Maybe it was $1 million. Or was it $2 million? I don't know. Anyways, I'm like, that would cost like $5 million to build. I'm like, can we truck this back to a parcel of land in Hammonds Plains?
Yeah, it's so you get all these nuances of like, to understand if something is a bubble or not, you need to understand how to value it,
Yeah.
right? So how do you have that conversation with people when they're asking about, well, what is this worth? Like, how do you answer that question right now?
My go-to and my fail-safe, and I think I like to try and keep it simple, stupid, like my motto with life. Maybe because I'm a little slow, but this is how I see it. I'm like, if you can't replace this for what you're paying, then the value is there. And
Yep.
it's a simple. I know there's a ton of other answers, but like again, I like to keep it super simple. So I'm like, look at your home here. Okay, it's 1,200 square feet. Yes, it needs some renovation. So if you spend whatever $50K to turn this into basically a brand new home at this point, its effective age now becomes effectively zero. And you look at a brand new one in the same square footage with a similar size lot and all those kind of things in an established neighborhood, what's going to cost you?
Yeah. And I'm really glad to hear you say that, because so much, and I imagine people listening to this, they'll understand the direct comparison approach, right? So if we're talking about value and how people value properties, if you ever looked at an appraisal, or if you just kind of considered the idea, you've got apples, you've got oranges, and the direct comparison approach is, how do these relate to one another? There's pluses here, there's minuses here, and you put values on these things, like a fourth bedroom, an extra bathroom, and that is how you estimate value. It's the same way people look really simply as, my neighbor's house sold for this. I've got a nicer home. My home's worth more.
Yeah.
Right? That's a direct comparison approach. Then you've got the income approach, which, again, people who are listening to this and have interest in rental properties would have at least a lay understanding of.
Yeah.
How much does the property make? What is my return on investment? What is the capitalization for the area typically? And then reverse math, what is that worth based on the income of the property? But then you have replacement cost. And this is one that a lot of people don't talk about because maybe it's not as fun or as interesting, but it's also maybe not something people have their finger on the pulse a lot. But replacement cost is, how much would it be to recreate that, right? And this is the one where we were really undervalued in a lot of areas for a long time, right? Like, when you could buy a bungalow in Sackville or Cole Harbour for 200 grand, and it's like a 2,000 square foot fully finished bungalow on a 9,000 square foot lot.
Yeah.
That with municipal services, it's like there's no way you could build that, even when the prices were 150 per square foot, which they're a lot more now.
Yeah.
But like, if the dirt was 50 grand, which is super cheap, but say the dirt was 50 grand, say you could get it through the city for 20 grand for your services, your permits, your architecture, blah, blah, your 70 grand for the land, and we're not even talking about HST.
Yeah.
And then you have to build a 2,000 square foot home at $150 a square foot. Well, that's $300,000 plus, so that's a $370,000 home,
$400,000 house for $250.
for 200 250.
Yeah.
So I can't be made to understand how that could be a bubble. That, right?
100%.
Yeah. So that's replacement cost. It's an important thing to think about.
To give you a little story on that, it was funny because, again, came from Ontario, where replacement costs on average were actually lower than the home prices.
Yeah.
because a lot of the home values are pushed through the moon. So that's how it was for our family home that I grew up in. Then we got here, and my parents bought homes here, and my dad was just like, "This is insane. My house is insured for. I paid $300,
Yeah.
but I had to insure my house for $500."
That's an interesting one. People.
He had that moment. He was
Yeah,
like,
yeah.
"He's like, what the hell?" And I was like, "Yeah, because the real estate here is so cheap. It's actually cheaper than it would cost to actually build and create what you're living in."
Yeah.
Like,
This is why when the home burns down, people try to take the money.
Yeah.
In a lot of cases, they're like, no, don't rebuild it. I'll just take the cash.
yeah, I'll sit on the land and take the cash.
Yeah. So I think that's an important part of it is, when people are looking at a home like, oh, that seems a lot for that home. It's like, well, how much would it cost to build that? And in this market right now, we have to realize that some of these things aren't just based on buyer frenzy, supply and demand. It's based on the building materials, because one of the substitution elements that we talk about, like, well, why would you have this if this was available? Well, a lot of people say, well, why would I take an old home in an older subdivision if I can build a nice brand new home? Maybe it's a little further out, but it's brand new construction. And that used to be a very real thing. Part of the reason those homes might have only cost $250 was because you could build a brand new home for $300,000, and most people would substitute the new home for the old home. But then with building prices where they went, that was no longer the case.
That option's gone.
Right? So, these are the underlying factors, because we were inherently undervalued to begin with, and there was needing to be or inevitably going to be a market correction. That was a big part of it. Then if you look at the replacement cost and the cost of construction, that's part of it as well. So I think those two, which are the main pillars of this price increase, those are valid in my opinion. I
agree. What do you think though is, so I guess with that being said, those things make sense. But what's driving, I'm going to use the term the bubble. I'm going to start using that. Okay. So what do you think's driving the bubble? Because a lot of people, especially when it started, like 2019, 2020, I got the constant thing of like, but there's no work, there's no jobs. Like everyone was saying that. And that's what I said. I was like, that's horseshit. I'm looking for people and I can't get them.
Yeah.
Right? That was horseshit. But what would you say, what would you say your top driving factor is on us now making this correction? Like it needed to be done, but it obviously wasn't happening before because look, the prices were low, replacement values were high, and that was for years. Like that wasn't like that was like a 2-year thing. That was like 10 years, 15 years of it being like that. And then now we're seeing this now, like you said, 2018 it started to like warm up. 2018 it started going. 2020 it was gong show. 2021's maintained that gong show status. What's the difference maker now that wasn't happening 10 years ago?
You can't credit it to one thing, but I'll give you a list of things.
Okay. Yeah.
So first, let's start with the fact that our supply here was decreasing. Okay, that is going to be the start of anything. Is what are supply and demand doing? Yeah. So supply was shrinking, and if you look back to 2018 and 2019, you notice this little trend. Like, okay, there was, at any given time, say in June, there was 3,500 homes available.
Yeah.
And then the next year, there was only 3,000 homes available. And the next year, there was 2,500 homes available.
Yeah.
We're talking pretty significant decreases in the supply.
Yeah.
So if you're looking at your graph, you have a shift in supply. The line, contracts.
Yeah.
Then we had a government that was very pro-immigration. So the city was growing through international migration, a pretty significant amount. I think it was as high as 20,000 people, but our net migration was about 12,000.
Yeah.
So all of a sudden, you have less homes and more people coming here.
Yeah.
So that is an increase in demand. So there's your first factor. Like if nothing else had happened in the world, those things alone meant prices were going to increase. Then you have a demographic situation where we have an aging population here. Disproportionate to the rest of the country, our population is a little bit older. And my parents are amongst those people who, they're kind of around the baby boomer age, not quite, but they're in around that bracket, where people here a few years ago had a decision, are you going to downsize? All right. And some of them made that decision based on the cohort going through around 2015, 2016.
Yep.
So there was a little push of supply at that point while these, gray hairs were downsizing, going to apartments, going to condos. But the people like my parents who said, that's not for me, they're now in that house for a long time.
I'm going to pause really quick. They're not called gray hairs, they're called boomers.
Boomer. But like they made, and they were baby boomers. What a terrible term. So all of a sudden, these folks, whatever you want to call them, they've decided to not sell their home. So now you have a further contraction in the supply of houses. Now let's throw in a few things. Their children, the children of baby boomers, which would be kind of people around my age in our 30s, a lot of them from Nova Scotia, they got out of university and they were told the age-old story that you can't make any money in Nova Scotia and there's no jobs here. And they went to boom towns, Alberta,
Ontario.
And so they went there in their 20s. They rode that wave. They got married. They had kids. And they're now at a point where in their 30s, they're secure in their jobs, right? They've got disposable income because they sold their property at a profit. And they want to be around their grandparents who are still living back here. So now you've got all those people coming back.
Yep.
So in addition to international migration, you've got net positive provincial migration for the first time in a very long time. We were net losing our young people, and now we're net bringing in people
Big
both
time.
back and new.
Big time.
So again, more demand at the same time that supply is shrinking. Then you throw in low interest rates, you throw in a pandemic, and you have a perfect storm.
Perfect soup.
That took something that might have otherwise happened over 5 years and jammed it into 18 months.
And then you see a 35% price increase.
Yeah, is that what it is? 35?
It's around there. I think it's 33.7 or something. Everyone's got a slightly different stat depending on what month and day you started on.
Yeah. And then, there's also now someone who bought their home 5 years ago that was going to be a 4.5-year home and they were going to sell. They've realized, well, I can't afford my own neighborhood, let alone like the neighborhood I want to be in, so I'm staying put. And what does that mean when they stay put? Supply contracts even further. So this is a self-fulfilling prophecy. It's a snowball that rolls in this one direction. And, again, it's a perfect storm. And I think these prices were going to happen. We're just a little bit early on them, maybe in some areas, which is why we're probably going to level off here soon. But we're not going to pull back the way some people think they're going to pull back.
It's not sustainable to maintain 33% a year or even 20% a year. That doesn't make any sense because in a few years it's going to be like, okay, everything's $5 million.
Yeah, and then I'll just live in Toronto or Ottawa or Vancouver or whatever, right?
Exactly. And those cities didn't get to where they are now over a 2-3 year period. Like, TO has been facing this for like 10, 20 years. Like 20 years ago, TO was having mad growth, and they've just had growth the whole way through.
Well, that's the thing. So people who are like, well, what's going on with those people in Toronto waiting for that bubble to burst? How's that working out for them?
Yeah, exactly. I think it's just, like you said, it's a correction that needed to get there. It's funny. I had a bunch of points laid out, and you pretty much hit them on the head. It's everything that I was going to say. The immigration's insane. And this is kind of my reassurance to people is that not only did we have all this immigration that caused it, it's now, again, to kind of say we're not in a bubble, they're increasing those targets.
Yeah, and we were down this year for obvious reasons.
Yeah.
They're probably going to be up next year.
That's their thing. They're saying, oh, look, we had a down year this year due to COVID. We were unable to maintain the numbers we wanted. So to compensate for that, we're now going to double up and add twice as many immigrants, which is great. But to be on the flip side, probably a topic for another time, there's no new construction.
Well, this is the other thing. If you want to add another thing to this perfect storm was that, man, there's only so quick they can build these houses. And when the city kind of has been a little slow moving on some of these developments, I mean, you had some crazy stat about the housing stock. Oh, that was for rental.
Yeah.
Like how much housing stock we would need. It'd be something like 30,000 units over a certain amount of period just to slow things down. It's not that dissimilar. Like if you cannot go and buy these new homes that are new construction, then you're going to have to compete with other people for existing stock.
Yeah.
Right? Demand is outpacing supply. Like you come back to those fundamental ideas, right? Which is why I know we both kind of subscribe to that supply and demand. But are there situations, full transparency that you're like, oh my gosh, there's supply and demand, there's market value, there's what something is, something is worth what someone is willing to pay. But then there are extremes in that.
Yeah, and 100%. And I think kind of what you were saying before we turned the mics on, there's kind of like situations and scenarios that are just getting caught up in the hype, big time. And I think there's one, hopefully this person never ever hears this, but there's a townhouse in Bedford.
Oh, God.
And
Carl's townhouse?
Yeah. This is the address. No. About 3 years old, maybe 2 years old.
I know the unit. Yeah.
Yeah, they're building them for 460 grand a pop. And then it went back on the market at maybe 5 something. And it's firmed up, I think it's 7 or it's 8. 750? What was it? 795?
It was, I think it was mid-7 somewhere.
Somewhere in the mid sevens. And this person had just bought it like a year or two ago for 450, 460.
Yeah.
So then at the same time, across the street, a fully detached home, bigger, detached, brand new, sold for less than that. And then, of course, on that same loop of townhomes, a bunch more popped up for sale because people were like, "Hell's yeah! If I can get 7 something for my place, I'm flipping it up." Every single one that got listed, never sold. They not a single one sold. They couldn't get anything close to what they thought it was gonna be worth. And so I think that person again got caught up in the hype of just like, it was right in the peak of like I'd say our craziest moment in the spring, and they were just like, "Yep, screw it, 200 over ask." But it didn't even make sense because you could buy bigger homes, nicer homes within a street.
Yeah.
For less money.
That, like, what we're talking about there is something called an outlier. Right? Yeah. And the whole idea of market value is that, okay, this is the consensus across a large sample of what the value is. And within that, you'll have people who get deals and people who overpay. That's always been the case, but it's really in your face right now and it's more extreme. The outliers are further away from, the mean.
Yeah.
And that's an exact case. It's also a really good case of poor research and not understanding substitution, because you could build that unit, like we talked about, for much less. Even when today's cost of building, whatever the land value would be for a semi-lot in that area, I mean, it'd be expensive, but it probably would be like 100 grand or something like that.
125, yeah.
And then at even $200 a square foot,
450 to build.
On a good day, it would be like 6, right?
Yeah.
Like, so, they flat out overpaid. Yep. And that's been going on for centuries, but you just kind of see it more right now. But it can be explained away. The challenge we have is, I'm going to get to this in a second. I'm going to hold off on this. I'm going to hold off on this for a second. But that is not an estimate of market value. So someone can't tell me like, well, the market is overpriced because one person did something silly. Right? That's an outlier. That is not market value. The market value is meant to be a summary of value based on people acting rationally.
Yeah.
And this also is a little bit of a challenge.
That was an irrational one, I think. And then on the opposite end of that is where you're seeing some of these price reductions or houses sitting on market. I think it's a product of how we shop now. Like, everyone shops purely on the websites, and they're only looking at what just came up that day. Because we've gotten so accustomed to, like, we have to see what's new, and I'm checking it so frequently, I already know what's out there, and so whatever's new, I'm going to look for it. So if it's new, it's all eyes on it.
Yep.
The second it goes past a week, nobody's watching it. Even if it's a good deal, there's houses that are sitting on the market.
100%.
I was out for dinner with a friend of mine last night. He just bought a townhouse, beautiful, full-size, 3-story, 2,500 square feet, $265 in a good neighborhood.
Yeah.
And he said it was sitting on market and the first offer fell, and they're like, I was at like 3 something, and he said I just threw in a low ball, and they just said yes.
Yeah, and this is kind of like we said, it's the sellers right now trying to navigate this tricky situation of, oh my gosh, do I take the approach that's been in vogue lately of pricing it low and relying on the market to run me up? Or if I'm starting to get apprehension about that, I've got to raise my price up, and probably where those people had the price listed for initially was correct, but all the buyers were like, man, and they want 50 grand on top of this. And the seller's like, no, I don't. Like, I just want that price.
Yeah.
Right? Like, so it is tricky right now as a seller to decide like what approach to take, because man, it's touch and go. It's street by street. It's week by week.
Yeah.
I was looking at the activity, and there was 1 week there mid-July where we had about a 20% drop off in the number of showings the same week that we were up about 20% in listings. Yeah. So it's a major swing because everyone went to the cottage, and there was no other explanation for it other than everyone went to the cottage.
Things opened up.
And the next week we were back. Yeah. The viewings were back up. So it's certainly something that needs to be navigated really carefully. I'm going to go in now to what I was alluding to there a second ago.
I couldn't even think. I'm just waiting for this now.
You're on the edge of your seats.
Yeah.
To be continued.
Yeah.
Because I wanted to tread carefully with this. We have a little bit of a problem in our industry with the fact that only the winning bid gets recorded, right? If we talk about market value is supposed to be a consensus based on, an average across a decently large sample.
Yep.
So when you have 7 offers on a property, right? One person wins it with the highest offer. 19 times out of 20, it's the one that has the highest offer.
Yep.
So that means everyone else agreed it was worth a little bit less than that,
Yep.
right? So unfortunately, that's the only one that gets published. So that becomes
The
the
new price.
recorded value for that home. And I know that you and I have been in situations where, as the listing agent, we might see a place that was on for 300 and it's like, okay, there's one offer for 305 and it's adorable and you just kind of throw it in the trash. And then there's like an offer for 326, 327, 331, 332, and then someone that goes 361, right?
Every single time.
And they win. That number gets recorded. So what does everyone now think that home is worth?
Yeah.
361. But the consensus, right,
330.
would be around the 330s. And depending on how you got there, if you just did an average, it would be around there. If you got rid of the extremes, you got rid of the 300, you got rid of the 361, and what's the median in there? Like, that's probably a truer reflection of market value. And in most cases, like, the range isn't extreme, but in some cases it is. That home you alluded to, they would have won that probably by $100,000.
Yeah, likely.
Like, a lot, right? And I've been in situations where we were the successful backup offer, which means, like, we know we came in second. So there's only 2 people who have real knowledge of where the offers went. And that's the person who won, because they know, like, they're the, but the person who comes second has a lot of information.
Yeah.
Right? So I've been in situations where we came second and then the published one was 40 grand higher.
Yeah.
So it's like, man, we beat 3, 4, 5, and 6, but this other person was on another planet. Right? So that is a challenge we have. And they're looking in Ontario. I don't know if you heard about this.
No.
They're looking at having transparent bidding.
A lot of people ask about that.
Yeah. I can understand as buyer, like, why don't they just tell me? Why don't they tell me what the other bid is? And it's a tricky question to answer. It's like, but we can't, we have a professional obligation to not disadvantage one party over another and to not disclose anything that's private information to the sellers. The sellers own those offers, and we can't give one buyer an advantage over another. But it's going to start going that way, like in some sense, so you've got people now who are taking the top 3 offers and saying, hey, your top 3, do you want to reoffer? Like, that's starting to happen a bit more than it used to, and things like that.
I think some of these new online brokerages, I think that's like their objective as well. I don't know if they're going to catch on, but there's a lot of these new, like,
Make a bid.
I'll call them fintech companies that are going after the whole brokerage and selling real estate market. And that's kind of their platform, is being able to kind of offer that open bid style concept.
Yeah. It's like eBay,
it's
right?
like getting sellers to buy in on that, though. If I'm a seller, I don't think I want that.
Why would you? The proof is in the, like, look at what we just talked about.
Every single listing I do, that's what I tell all my sellers. I say, look, we're going to have a couple that are a waste of our time that are going to be at asking. No point. Most of them are going to sit here. And then if we get 20 offers, there's going to be 2 or 3 that are going to be up here, like full psycho. If we get 5 to 7, we're going to have one.
Full psycho.
we're going to have one that's up here. But that's literally every single one that I've done. It's been that every single time. It's like, without a fail, you have your 3 groups. And that, like you said, I think that middle is really where it actually lies and where it's worth. It becomes that extra value of what it's worth to that person that pushed it over the edge. And once that gets published, everyone's like, oh.
Yeah, every seller on the street now says, well, that's what my home is worth. And, and even the buyers out there, they're like, well, gosh, I guess I was wrong. I thought it was worth this. It turns out it's worth that. And that's why good representation, like, no, stay the course.
Yeah.
That was possibly an overpay.
Yeah.
Right? Now, a lot of buyers got bailed out as the market continued to go higher, right? Because what we're talking about here, if we're being honest here, is we're saying, okay, well, if market value is about here and someone's paying here, that sounds a little bit like a bubble, Neal, right? So the question is, though, when you can start throwing away these extremes a little bit, people are going to do things like that. It's not dissimilar to when, people who bought in 2012 when the ships were coming in and blah, 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 and like everyone thought they was going to make money. I had clients who then a few years later, 36 months, they were kind of worth about the same.
Yeah.
Or maybe they're worth a little bit more, but when they broke their mortgage and all that, they were kind of flat. Like, that's a real thing, and I
Yeah.
think there are going to be isolated instances where people are going to be, flat on the appreciation of their home, or if they have to turn, like if that person had to turn and burn that unit in 12 months, they're going to be in a world of trouble.
Yeah.
But I don't think the exception makes the rule. Like the exception doesn't make the rule. The underlying value is there if you're operating rationally. And
Yeah.
people might argue that there's irrational behavior out there. I would say yes, there are in situations, but the majority are still paying, I think, fair value for the homes.
I got two things for you. Do you think the banks protect the bubble aspect, or do you think they're just part of it like anyone else?
Wait, protect in what sense?
Oh, well, they get their appraisals. The idea, like they always say in Ontario, like rarely ever does anyone get to full loan to value because the values are so crazy and insane. The bank's like, no chance I'm willing to put out 85% or 80% on that. They're only getting 65, 75. Like they're going on lower loan to values. Here, the bank, for the most part, very infrequently have I had the issue of it not meeting the appraised value. It happened a few times this year, but not like consistently. Do you think the bank is a good, I don't want to say fail-safe or a protector of it, but do you think that they're like, if it was getting out of hand, do you think the bank would start to be like, no, like we're gonna?
Well, the banks don't do it, but Bank
we're
of
gonna-
Canada does it, right? With
we're
your
gonna take a step
bond,
back.
yeah, with your bond rates and your overnight rates and all that stuff. I mean, yeah, like the banks on a individual level don't do it, but the Bank of Canada does it. And for years, they would pass all of these policy changes to slow down the Toronto market. And out here in Nova Scotia, we were like, why the heck are they doing this? Like, this doesn't, we're not exploding, right? This
Yeah.
is why amortizations got hacked down from 40 years. This is why they got rid of zero down. Also, the bond rates affect, the bank borrowing rates, which in turn affect the street rates that you get for your mortgages.
Yeah.
So this is the other thing, one of the factors, kind of driving this acceleration here is the low interest rate. And if this was any other situation, interest rates would be up,
Yeah.
right? Like, how do you curb, this sort of situation? It's by raising interest rates. And typically, when you print a bunch of money, like the federal government just did, you have inflation. If you have inflation, interest rates go up. But right now, because a lot of people out there took on bad debt, and I'm not talking about paying too much for the home. Here's the thing, and we can talk about this in a second. If there's one thing to overpay on, at least it's the thing that's the roof over your head, right? And
Yeah.
it's something you can pay off at low rates, and it provides something, and it doesn't typically, on a long enough timeline, go down in value.
Exactly.
Bad debts, unsecured debts, line of credits, Visa, cars, like we just printed a lot of money as a country. And
As a
I'm not saying I don't think it was the
international
right
world.
thing to do. I think it was the right thing to do. Time will tell. But, there is a lot of inflationary pressure out there in the market, which at some point is going to have to come home to roost in the form of higher bank rates.
Yeah.
So there is going to be an increase in mortgage interest rates that already would have been here and already might have slowed this down, except the government was unwilling to raise interest rates during a pandemic.
Yeah.
Because people had taken all this bad debt, they had lost their jobs, their businesses were struggling. They're not going to let the banks raise the rates.
Jack it up.
But once COVID's in our rearview mirror, those rates are going up.
Yeah.
Right? There's no question about it. So, so what roles do the bank have it? I mean, they've got to have some role in it. Right?
Yeah. Well, I just say more so like, would they finance the mess? And I mean, I think at the end of the day, they will.
Yeah.
They're a business too. I think there's a false sense of security with the banks that they're like out there to do good, and at the end of the day, they're just another business like everyone else trying to make money. So yeah, I think your answer was right to it. But I was just curious to see what your thought was on do the banks.
Well, or if we're relying on like the federal government and the banks to like protect us from ourselves, a lot of people are not going to like that idea, just philosophically. But I do think that,
They control everything.
yeah, no, but I think federal fiscal policy is incredibly important, and that's mainly the Bank of Canada rates. But I think, it's going to sound cliche, but you need sound advice, right? Like you need sound advice from people in the market. Say, okay, understand the pros and cons of buying in this current environment. Like, what are you telling people out there on the buying side?
And that's I was going to say. So for me, like I said, I kind of go back to all the topics that we've gone over now and kind of weighing out like, look, at the end of the day, yes, it does. Like, things have gone up a lot, and yes, you're going to pay more than the guy did, your friend did 6 or 8 months ago. But again, you still can't replace what you're getting for what it's worth now. And in a long-term play, you're in good shape. Now, if I have a guy coming to me saying, hey, I want to flip this house, yeah, I'm not just going, yeah, here, let's just buy this one and let's do it. Because before, you pretty much could. In Halifax, you could pretty much pick any house you wanted if you made it nice enough, and you could try and make a go of it. But there was always an opportunity for flip out there, I felt like, in previous markets.
But that's even only in the last few years,
Yeah.
right? Because our market used to be a little bit more condensed, where it's like, 200 got you a beater and 300 got you a really nice home, and anyone who
Yeah.
knows the cost of construction and capital gains and closing costs, that didn't make sense. But now the market's opened up to the point it's like, okay, you can go 350 to 650, and that's
Yeah.
a lot of play in there to do something like that. But that's
Yeah.
a relatively new thing in the last 4 or 5 years. But
True enough. But yeah, so for those investor clients, a lot of times they've been shelved and they've been shelved for a while, or it's a lot less that we're looking at. And when we find something good, it's going to act quick. For a regular buyer that's looking to live there, my guidance at the end of the day is, you know what, now is still the time. At the end of the day, it's going to continue to grow. We have all these other things that are still pointing upwards. Yes, I understand that rates are going to come up in the coming years. I don't think it's going to be a hike of, 2% to 17%. It's going to be a gradual increase that we kind of all are expecting. I don't think the government of Canada is going to be willing to allow it to go up fast enough that it's going to put everybody underwater.
No. I mean, our rates are still going to be low based on historical perspective. Like, we're not going to hit double-digit interest rates, or we're not even going to hit a 6 or a 7. I'm just saying we're going to be back up around 4 sometime in the next 24 months, right?
Which was great.
It's
4
great.
years ago? 4 years ago, people were like, oh, I signed at 3.6. And you're like, oh,
Man,
let's go.
I remember when I locked in my first 3.99 deal. I'm like, lock it in, 5-year fixed. It's never going lower. So, yeah. I mean, the other thing too is, I always ask people well, is your home somewhere that you want to live or somewhere that you want to make money off of?
Yeah.
Because not everyone's answer is, I want to make money off it.
Yeah.
Right? Some people it is, though. And you have to treat everyone for what their specific need is. Like, I have a lot of clients who buy one home and they're in that home. They're going to be in that home for 30 years.
Yeah.
And you look at that as okay, it's a blue chip stock.
Yeah.
Right? You don't buy and, you don't trade a blue chip stock every 2 years. You let it ride.
Yeah.
Right? And real estate is that. But if someone's goals are shorter term than that, then yeah, it's important to have these conversations. It's the same reason when I have a client who buys something and pays a premium for something that is really nice and polished and finished.
Yeah.
Right? Like, if it's the nicest home on the street, it's like, well, just understand that you're paying a premium for this, and there's very little value that you can add.
Yeah.
Right? As the new owner, there's very little value that you can add. So you need to be fully aware that all this home is going to do is get older.
Yeah.
Right? So that means, it's the same deal with new construction. As new construction, you're reliant on the next phase costing more, because you're not going to make your home any nicer.
Yeah.
And it's only going to get worse the more you live in it. Right? So you have to have these conversations with people. And the trickier thing I find right now is people paying big money for standardized product in outside areas. Because, again, it all comes down to substitution. Like a turn-of-the-century Victorian home in the south end of Halifax, there's only so many of them, right? You cannot just substitute that for something in an area over here.
Yeah.
However, if you get into standardized product, like this home looks like that home looks like this home, and you maybe go into an area that is more closely related to possible future development, you could find someone who's like, well, I'll just not get that one, I'll get this one, right? Goes back to what I was talking about earlier, how it used to be a situation, well, I won't buy the used home for $250 if I can get the new home for $300.
Yep.
So there are going to be a couple people who might have paid elaborate prices for standardized product in areas that aren't inherently,
Appreciating.
well, not inherently, but not susceptible to competition, right? Like, not as susceptible to substitution.
Yeah.
Right? Like, there might be some people who do have a challenge with that, but if they say, yeah, but this is just where I live. Right? Like, I just want this to be my home for the next 20 years.
That's true.
Right? We can't entirely put our value system on other people. Like, people listen to this and want to make money off of real estate.
Yeah.
That's not what everyone wants to do. But if you're someone who wants to make money off this real estate, how do you buy in this sort of time?
Yeah. I agree. I think you made a good point when you said stay the course, because I think that's a big one for a lot of people is they start to be like, well, do I just have to go insane? And I'm like, no. Like, these houses still have a certain amount of value. Yes, they are increasing, but we don't need to just keep going higher and higher and higher for the same thing that you're going after. we need to keep in mind, like, there are maintenance issues with this home. There are this, and this, and this. This is what this is worth. I understand his neighbor's house sold for this, but you need to, like, stay focused on that. And I think sometimes it means we end up having to go through a few more properties and bid a little bit more. But I think at the end of it, they're going to be in better shape, whether they're holding it for the long term or not. But I do also say, like you said, there's some clients that like desperately want it, maybe because it's a non-replaceable property. Then you just need to make the decision, like, how badly do you want this thing?
Mm-hmm.
And because then really, I wouldn't say price is irrelevant, but it kind of becomes that way because it's like there's certain factors that you can't put a value on because it's not as simple as saying, okay, it cost 10 grand to do this. You can't replace a certain location. You can't replace a certain lot. Yep. All these sorts of things. But yeah, that's what it is. I this summer where we had this huge pullback, I wouldn't say pullback, sorry, slowdown due to I think external factors. I was called all my buyers, all the ones that had gotten tired and kind of fed up with it, and I was like, let's go. Like, now is the
100%.
time. Here's an opportunity.
Yep.
You guys were tired of bidding against 25 people and going for ridiculous numbers. You won't have to do that right now. Mm-hmm. So that's kind of what I've been trying to do right now. Again, and I'm trying to recommend to a lot of buyers. I'm like, now is probably the time because I'm having so many asks that this is taking place. I think now is the time. I think the fall is going to come back.
I think so too.
Crazy.
Yeah.
I think it's going to come back strong. The immigration's going to resume. You're already seeing it. You drive around. The Ontario plates are driving around. People are going to be coming in. People are going to be going back to the day-to-day grind, and that's when they're shopping the homes. Mm-hmm. That's back on their mind. They're spending more time in the house. It becomes more relevant to their day-to-day. So right now, on a short term, I say buy. Even in general, though, I'm still a big proponent of buy. I don't think going crazy on every house is worthwhile. And yeah, I'm with you on the sense of if it's something that's like a replaceable product where there's 100 of them on the street, you gotta be more cautious on what you're doing because you can get burned.
But would you say it's harder for an investor to get in right now?
Yes, big time. As an investor, they're struggling, and that's a weirder market I find. Like, it's almost like in some levels it goes more crazy, like duplexes and triplexes. Some
I
of
don't
them
know,
go
man.
insane.
It's all over the map.
But then some
there have
of them
been some good deals on some small scale duplexes around, man. Good deals.
I see some firm up, and I'm like, $335 for that. It's a side by side duplex. I'm like, what in the world?
Yeah.
But then on the flip side, I see some that go for $550, and I'm like, who?
Yeah, and the challenge with a lot of duplexes is people are often looking at them as owner occupied situations, so they they will
That's
still
more inherent value to them.
Pay things for like the location they want, the school district they want, or whatever thing.
Yeah.
The one thing I try to tell investors is that, first of all, are you in this for the long haul or the short haul? Well, I'm in it for the long haul.
Yeah.
Right. So the beauty about when you have real estate, and this is why so many times I say, get in early. Right?
Yeah.
Because the beauty is when you have real estate, like you and I right now are a little bit frustrated because maybe there aren't deals out there for us to buy.
Yeah.
Would you agree about that?
Yep.
However, for the stuff we have,
it's been great.
It's been great.
It's been great.
Right? So when you're in the game, when the highs are up, that means all of your refinances are coming in, super high. You've got massive equity. You've got cash to play with.
Yeah.
And you can even make the argument that if you take that out and you put it into the market, maybe you're like, oh, I can't believe I'm having to pay $600 for this instead of $500. It's like, yeah, but your property is worth $800 instead of $600 over here. You just pulled out more money. So even if they level out in some way, you're kind of at parity because all you're doing is moving equity from one to another. So when things are good, you're good. And when things go down, right, if there is a slowdown, what do? You buy. Right? Like, so this is why owning real estate is the best thing going. And the earlier and the more that you can get, it's like anything. As soon as COVID hit and there was like a brief recession, right? I was like, oh my God, this is going to be the gold rush of our generation. For people who have money right now, this is going to be the time. Look how many people like just made money in the stock market.
Yeah.
Right? Like just oil or something. Like if you had cash,
yeah,
right, and you bought that at Lowe's. I even joked with my friends, I'm like, man, I've always thought of buying a restaurant. This is the time.
Yeah.
Right? Like you probably have gone around and like bought a restaurant if you really wanted to. Like, and that's terrible to say, but like,
pennies.
What's that investment? When there's blood in the street, that's the time to invest.
Yeah.
But this is why, yes, you may pay a premium for a property, but you're going to get in. You got to get in at some point, and then you'll ride these highs and lows. And sometimes it'll just mean your property's worth more, and other times it just means your buying power will be worth more. That's the same thing.
What do you say to the people that say, what happens when I buy and then this thing pops.
Well, I think we've spent a lot of time discussing like why I personally don't think there's going to be a pop of any significance that could be damaging to someone. I really don't. Like I think.
Are we gonna be sitting here with our tails between our legs in 2 years, being like this whole thing just went to zero? I would like to scroll back to episode question mark and retract my previous comments.
Yeah, man, I would love. I actually think this will be great to talk about. I think again, some people have overpaid for their homes.
Yeah.
As long as they did so knowingly and well informed.
Yeah.
I don't see an issue with that. The vast majority of people, I think, paid top dollar in a hot market. Yeah. But I think the values are supported by a lot of other things in certain areas. Like areas are going to be affected differently, depending on the home. But for the most part, I think the value is there in a lot of these things. And yes, it may be worth roughly the same in 24 months or 36 months, but that's not all that different from a lot of things we've seen. We have recency bias, right? Anything that's happening right now is the most important thing and it's never happened before.
Big time.
This all happened before.
Yep.
Right? I don't think there's going to be like, oh my God, I'm down 15, 20%.
Yeah.
I just don't think that's there because then you get back into substitution. And like I just said, if the market goes down, what are people going to do? They're going to move here more again. Right? Yep. And they're going to buy more. And you and I are going to be out there buying more properties. Yep. Like I would love if things just dropped in price. I would just buy up everything.
Every investor would love. That's what everyone,
exactly.
They're all shelved right now.
So if all the investors and buyers, of scale, if they don't seem concerned and they view that as an opportunity, they'll just buoy it right back up. But we do need to return back to, the consumer price index, like 1 to 3%. Like we need to go back to a steady level.
What do you think the timeline is on becoming that steady level? Are you saying like?
I think we are at the height of the market, like in terms of pricing. I really do.
You don't think it's going to continue to go from here? You think
I don't. I think we're leveling off currently. I really do.
I tend to disagree.
Yeah, I mean, I think there's going to be the fall rush, as there always is. Though that fall rush is not any different than the fall rush last year and the year before, and blah blah blah. But I think these values, based on square foot or whatever the product is, this is going to be our baseline that we're then going to putt along from here from. I really do think we're about there.
Okay. Yeah. I think there's a bit more to go. I don't think it's going to be 20-30% on a year over year. I think it'll be more like a 6 to 8% year over year. But again, based on I like how doing my stats and comparing. And so to what you said about kind of the immediacy thing where people only this is what we're living. This is the only time it's ever happened. This is actually what's happening. Like I can't look at anything else. You look at going back to the population booms and kind of generations. You get your boomers and then you have your next gen. You have their kids now that are buying homes. That's a huge bubble. If you look at the population pyramid, you get the bubble of boomers, then you have the bubble of their kids. And so now they're all in that growth. If you look back to late 70s, early 80s, and kind of through that, they had this exact same thing. How many, I know when I talk to some adults, they will say, I remember I bought my first house for $50,000. 3 years later, I sold for $180. I've heard those stories 100 times over.
Yeah.
And we're now in that same thing 40 years later because we're just the next gen down.
Yep.
And based on that, this has been a short window. I still see some room. There's still some run up years. I was actually sitting with a couple of bankers there yesterday, and they said the same thing. I was sitting with them, and I said, "What do you think?" I was because I was kind of hesitant. I'm like, "Should I be still?" And they're like, 3 years to go. And I tend to agree. I think.
Well, I mean, if you look historically, anytime there's been a major pandemic or world crisis, it's been followed by incredibly, incredibly lucrative years. Yeah. Right. But everything now happens so much quicker than things used to happen that, I think we might be getting, like I said, I think we're getting a long period of growth condensed over a relatively short period. And it's funny because the way things are going, even if I'm like, I think it's only going to last another 6 months, well, gosh, in 6 months, it could be the 6 to 8%, right? In a weird way, we're leveling off, but it's a concave or convex, whatever it is, it's curve.
Yeah.
Right. I think that, like we said, it's not sustainable, but, the growth rate, there's a difference between the value and the rate of growth. I think the rate of growth isn't sustainable, but I think the value is.
Okay.
Yeah.
What would you say, as kind of a last point, what would you say to someone what's an indicator of like something you should be concerned about? Like when you start seeing this happen, like
When you
take
stop seeing cranes all around town.
hold your wives, hold your kids, take your money, run the heck out of here, move
No,
back to Toronto.
I think, I love looking at the skyline and seeing cranes, right?
Yeah,
The more cranes are around town, stuff's going on,
yeah,
right? Money's coming in, people are coming in.
yeah.
I would be concerned if you stop seeing that. If you want to get really literal, in terms of like, stats or data, what do you have in mind? You obviously are this is a rhetorical question.
I'm trying to load you up here so I can.
Okay.
But the reason I'm like kind of hesitant about that answer is because I look at our housing starts and they're not necessarily increasing by that much, and I don't think it's a factor of the developers not wanting to throw more cranes in the sky. I think
Yeah, that's a
there's
good point.
ulterior items that are causing an impact on that, and I think that's getting even worse. And so I think you might see less cranes in the sky, and I don't think that's because we're having any more. We're just now all the housing is fixed.
Totally. That's a good
So
point.
that's why I'm like I don't know about that on that factor, but I don't know. I don't even know if I have an answer to like what should somebody be looking for. And I think when you start seeing the inventory climb steadily, maybe even almost rapidly, like that's gonna be the one where like right now we're at like 2 months of inventory.
Oh God, yeah, that's always been the indicator. That's saying like once supply goes up,
Again, yeah.
that's going to be the indicator, right?
Yeah.
There's no question. I thought you were meaning more like nuanced little things that you look for. I
Yeah.
mean, looking at migration's huge.
Yeah. Well,
Right.
that's the other thing. So when you start seeing, I guess, yeah, I'm looking like the more down, like the further down the line items. So yeah, like if I see, okay, the government now is starting to talk about pulling back the immigration items and things like those items.
Yeah.
There's new things going on in different places that aren't going to benefit here. That's when I would start to be okay, like there's something coming down the pipe. But I think as a whole, right now, our biggest push is the mixture of the immigration and then the population boom. I think immigration is kind of an obvious one that everyone talks about. But I think a lot of people are overlooking the generational boom, and they're not factoring in that that's a big part of it. Because I see, again, I mean, maybe it's a product of my age, because I'm also one of them, so are you, but a big portion of my clients are people that are just kind of getting in, and the homes they're buying are typically people that are just getting out. Do you know what I mean? So
Yeah.
it's we're in that turn of generation, so.
Yeah.
Anyways, I guess I guess when the supply starts to increase, that's gonna be an interesting one. But it could be also a massive if there's things that start to impact the demand, which would be the government coming in and saying like we're shutting down the immigration and those kind of items.
Yeah. Yeah, no, I absolutely agree. And I think, like, if we want to kind of close up on a recap, I think we keep coming back to these same sentiments, regardless of what you're buying, is that you have to be well informed on what you're buying, and you need to think about exit strategies, right? Which, comes back to, like, if you're an investor in this market, you need to be very knowledgeable in what you're purchasing. And if there is a pullback, gosh, I would want to make sure I had a good product that I'd purchased initially.
Yeah.
Right. And it means like, hey, I always tell people not every investment property you buy is going to be a home run. Some are going to be singles and doubles. Right.
Yep.
But the key is to accumulate. Best deal available at the time. Right. So I've got clients who, might have a property that, my gosh, they crushed it on that. And they look back like, oh man, wouldn't it be great to get another one of those? Like, yeah, you got those and, that's great. But let's not overlook this opportunity and that opportunity just because we're enamored with this place that was a home run.
Yeah.
Single, double, and then, hey, it's so funny how another home run comes along.
Yeah. If you sideline
Right.
just looking for home runs, it's hard to ever get in.
Totally, right? Like you gotta have a combination. So right now, maybe this is a year where you're picking up singles and doubles, right? But things have a way of ebbing and flowing, and maybe there's some home runs to be had when there is a little pullback like we're having right now, a quiet time. Because I can tell you, I've got some clients who hit what are going to look like home runs in 12 months during this little window right now.
Yeah.
Right? So, be well informed, have a clear perspective on what you want to do, your exit strategy, and don't overanalyze, but I guess proceed with caution is fair to say right now.
Yeah. I tend to agree. I would second everything you said there. The biggest thing is kind of be well informed. Make your decision based on what makes the most sense for you. You got to factor in whether you're staying or you're leaving. I think next time we should talk about cap rates because we've thrown that out there a few times because really this we talked a lot about a single family home style, and I think cap rate plays a lot on the investor side.
Yeah.
Especially maybe on the bigger investments, but even on the small scale, pretty much once you hit 3-4 units, you can almost start taking into account. Honestly,
I think so. Yeah. Yeah.
So,
and I know you like to math.
I like to math.
So, math class with Neal next time.
Professor.
Right on.
All right.
Okay. Wrap it up.
Yeah.
All right.
Thanks, everyone.
Good to see you as always, buddy. Oh. Big applause.